Welcome to Investors Insights. Our topic today, 8 days out. You heard me right. And I've just finished an incredible meeting with my distinguished colleagues, Bobby Norman, Trey Booth, and Ty Miller. And in 8 days, this country will have an election. And we want you to understand how that relates to the markets. We have historical data to talk to you about. And I think you're going to find this very beneficial. With that, first of all, Bobby, talk about the underlying corporate earnings. We've talked about this in previous vlogs, and clients have appreciated it. You know, it's one thing to talk about elections, but it's also another thing to talk about corporate earnings that are tied to the economy and make this economy move forward. Discuss that first.
Yeah, so obviously with politics and the election expected to take center stage over the next 8 days, I want to remind our viewers that the market will also be following earnings carefully as well. And so in the past few weeks, we have voiced our opinion that the recent positive performance of the S&P 500 can be attributed in part to expected earnings growth for the companies that comprise the S&P 500 index. So for today's video, we want to share this chart and provide an update on earnings expectations for the S&P 500, as well as the extended view into the mid and small cap segments of the market. And we believe that corporate earnings drive the direction of stock prices over time, especially when the major indices are trading at higher valuations like they are today. And as the data shows, earnings per share are expected to trend higher across each of these indices over the next several quarters, with full year estimates reaching record highs for the large cap and mid cap indices in 2025. So as you can see in the chart, the broader S&P 500 index seen in the blue columns are estimated to see earnings increase by 11% year over year in the first quarter of next year. Mid-cap index shown in the orange columns are expected to increase earnings close to 1%, and the small cap index seen in the yellow columns are expected to grow 3.5%. So as always, these are estimates that are subject to change, but this chart proves that corporate America is healthy and justifies the current market action.
Yeah, very much so. And we've talked about this over and over again. We're seeing a very strong economy in corporate earnings. That said, though, people are really worried regardless of party. So I want to talk about that. Regardless of party, who you're voting for. We've always said, look at the data, but we're going to talk about that now because strong economy, corporate earnings. Trey, talk about Republican, Democrat, regardless of how the election goes, how have the markets responded?
Yeah, thanks, Greg. But yeah, 8 days out, we're going to have an election, and then after the fact, we're going to have to deal with what's there. And Strategas gives us a good bit of data that we always refer to in this meeting. And we also mentioned that a lot of businesses are maybe in a process of pausing. But then after the election, what happens next? And this chart, I think, does a great job of showing what happens under all the different potential scenarios, whether it's Republican House, Democratic Senate, Republican President. There's only so many combinations we can have. And you can see on here, this represents every possible outcome. And the good news is none of these periods show a negative return. So there's no outcome where the market has gone down every time. The worst outcome is all the way on the far right, a Democratic Congress and Republican president. Well, the good news is that's the least likely outcome this time. And so we can also go ahead and carve that off. If you look at the middle three, those are the most likely, and that's got an average return of over 13%. I think I can say pretty confidently, most of our clients would be ecstatic with an average 13% return going into this election and coming out. I think a lot of people are a lot more bearish on this and a lot more worried. 13% annualized return is a phenomenal rate of return. And I think we should all kind of pump the brakes. The sun will come up after the election, and we will adjust accordingly, and we'll deal with the reality that is there. In addition, though, while we're also hyper focused, I want to remind people. Bobby pointed out on earnings, the world is still turning. We're all hyper focused on what's going to happen 8 days from today. While we're looking at that, the BRICS, which includes Brazil, Russia, India, China, South Africa, and now it includes 20 other countries. They had their 16th annual meeting in Russia over the last week. That is a massive deal. These countries getting together, we're moving more and more towards what's called a multipolar world. similar to what it was like during the Cold War, where there's two major power centers, the U.S. and somewhere else in the world. And so that's something we're looking at as regardless of who wins the election, something we're going to need to keep an eye on that may impact markets is that if that catches some steam. These countries represent 45% of the world's population, as this chart shows, roughly 27% of the world's GDP. So something definitely not meaningless, something worth looking at. The good news is, after they met, the big goal was to create a banking system to compete with the Western SWIFT banking system. That did not occur. There was also talk of a unified currency. That did not occur. So no major initiatives occurred from this, but just the fact that they met was a massive. It was massive geopolitically, and something we're definitely watching closely. I know the elections in the U.S. are important, but the world has continued to turn around that, and we're going to have to keep watching everything else as well.
That is excellent information, and folks, we ask you to share that with your friends, family, colleagues. Great data there as we approach the election. And Ty, you did a fantastic job as well. Really complimenting what Trey was doing, the two of you, your information coming together like that. And then in relation to Bobby talking about corporate earnings, elaborate even more on presidential elections.
Yeah, well, I appreciate it. So again, I'm going to be election focused, just kind of like Trey was. My first chart here that I'll show is the growth of $10,000 in the S&P 500 since 1949. So if you put in $10,000 in the S&P 500 in 1949, how would it grow? And so pretty simple chart. The main kind of benefit you want to take away from this is the black line is fully invested. And so that means that the whole time you weathered the storms, there are obviously down years. Obviously it's 100% S&P 500, which, a lot of clients are not and wouldn't be recommended to be. But the main point is the power of compounding no matter who is in office. And so fully invested grew rapidly. You can see this major difference. And it took a little time, but now it's just such a huge gap from the black line to the red and the blue lines, which are just, if you said, well, I'm a Republican, I'm only going to be invested when a Republican is in office. And then those other years when Democrats, take office, I'm not going to be in the market whatsoever. And then the blue line, Democratic, same kind of situation as the Republican. You're only invested if the Democrat is in office. And staying fully invested is important no matter who is in office for that power of compound interest. Just the market tends to perform well, as Trey showed, in a lot of different circumstances. And then trying to, nail down a little bit more specific of a time frame is just the 1 year performance. And so in this chart here is the average S&P return the year following the election. And so but it's broken out between new president, reelected, or all years following the election. And so all years following the election, it's up on average almost 11%, 10.7%. And so that's a very good return. A reelected president is up about 7.5%, whereas a new president is up about 12.5% that following year. And so what's interesting about this year is how they would categorize these candidates. And so, of course, Trump has been president before, but he wouldn't necessarily be reelected. He had a gap. And so I believe he would probably be classified as a new president. And then Harris, of course, while she is part of the incumbent party, is not the incumbent. And so she would be classified as a new president. And so, the hope is that the market would react no matter who gets elected as this would be a new president, which would be an outsized return compared to, the normal average. That leads me to kind of my next chart here, which builds off that one. It's just the first year of a 4-year presidential term. As you can see, a lot of gains, 3 negative years since 1977. Again, this is just the first year after a new term. And so we haven't had a down year since 2001 in that first year after a presidential election. In the last 4 times, the returns have been pretty outsized. And so the main message I want to get through here is, yes, the market will react differently to who is elected. Certain areas will work better than others. You're going to want to position differently, but the main focus is don't pull out all your money and go to cash. You want to stay invested because in all scenarios, the market has historically worked.
And let me say this, emotions are high as we approach this election in 8 days, regardless of your political views. And there's no guarantee on the historical data that we've just presented. But I will tell you that in my 43 years, I have tracked this kind of information. and looking at the different combinations. And this is some information you need to look at as we proceed to the election and after the election. And we thought it would be invaluable to you to see this data and to see what we're looking at here at Five Plan Partners. So with emotions high, news media talking, constantly, campaigning and advertising going on, just remember there's more to it than just the actual election itself. And we're going to keep you updated on that through our social media, Facebook, Twitter, LinkedIn, our podcast on YouTube. We're going to continue these vlogs. And also, we're going to be here so that you can talk to us if you have questions, concerns as we move forward. So we want you to have a great week. We want you to go into November as we see this information starting to become reality. And also from the standpoint, we've got about, a little bit over 60 days here and we're into 2025. So just know a lot's going on, but we will keep you informed and every day striving to see to it that our clients have a better, richer, fuller life. We hope you have a great week. If you have people that are really uptight about the election, share this information with them and we'll be talking soon. Thanks.